What is going on, Alpha Hunters? Hopefully, you are having a very terrific Thursday. The week is almost over. Let's finish it out. All right, we got one more day to go, but we can see what's kind of going on here on Thursday. Nice little gap down here on the SPY. About a 0.3% gap down. Not a crazy one, but we did continue to kind of sell down. Nice little tried to bounce there in the first 30 minutes, but then for the next hour after that, we kind of just sold down. Session lows right there. And it's been a kind of a steady rise back up to the session highs here over the past 30 minutes, making fresh highs. And that's kind of where we are. A little bit of a pullback here over the past about 10, 20 minutes. That's kind of just where we are right now. Take a look at the Qs. Qs, you can see we've sold down pretty good there in the first five. They did drop about 0.2% there, and then yeah, that first 5 minute nice little drop. Kind of a little bit of a mound here, just kind of rolled over, just kind of dropped off there for really the first hour and a half. Just kind of sold off there. Nice little steady climb here over the past few hours. CRM, Salesforce, had earnings, and apparently, I don't think that conference call went well. I didn't pay too much close attention, but we can briefly look at that here in just a sec. IWM, nice gap up here on the IWM. This thing's been pretty strong today. It's been getting beat up the two previous days. We know that, even going into late last week, getting beat up pretty good. About a 2/3% of a gap up there. Quick pullback there in the first like 20 minutes, and nice little run. Well, you can see how flat it has gotten up at the session highs here over the past 2 hours or so. Yeah, pretty sideways up there. Currently up a little bit over 1.25%. The Dow, the DIA. Well, what do we got here? We got a little bit of a gap down, about a 0.85% gap down. Kind of just tried to bounce, but just kind of rolled over there first 30 minutes. Steady climb, kind of flat here over the past hour. Okay. Currently down about 0.65%. And yeah, currently at session highs roughly, but we'll see how it looks on the daily. RSP not looking too bad here. A little bit of kind of a flat open really. A little bit of a gap up. Pump, drop, and then steady rising. Basically after that first 30 minutes, looking pretty good here. Towards the session highs, not quite there. That put in about 30, 40 minutes ago. Currently up a little bit over 0.5%. That's how the RSP looks. Yeah, this was a pretty good spot. We kind of talked about this yesterday. Getting into these highs that we had back in kind of late April. Looking pretty good here. We'll probably be bullish in that spot. The DIA, the one, oh man, this is one. Oof. Another pretty large gap down. I mean, ever since, we hit all-time highs and we got to that 400 level there on the DIA, this thing's just been, just getting train wrecked. Past 2 days especially, these gap downs. Yeah. I would still rather be a little bit bullish, and mostly because of everything else. But not so much with the DIA. The DIA just doesn't look all that great. But the IWM, getting that nice bounce back today. And a little bit of a little abandoned baby action here over the past couple days. So not a super clean one. Obviously, we had a little bit of interaction last Thursday overlap. Not too bad though. Not too bad. Yeah, I would just kind of be bullish there. Qs. Okay, finally got a little bit more of that pullback for the Qs. It was under the 10 EMA for a good part of the morning, and yeah, I think you're probably just gonna be bullish here. Anyways, finally gotten Qs to kind of pull back to the moving averages at least. And the SPY. Finally got the SPY. Almost did it last Thursday, but today hit right into the highs, the previous all-time highs that we had back in late March, hitting also right off that 20 EMA as well. I would rather be bullish on across a lot of the markets right now. I think we've had a little bit of a cool-off time. I think the RSP kind of cooled off a little bit. The DIA probably is continuing to cool off. So yeah, I think you're probably wanting to be bullish, kind of getting back into that mode. As far as CRM, let's briefly talk about this. I don't know really what happened here. Uh, they didn't miss on revenue too bad, but they beat bottom line. So they must have said something about forecasts. There must have been something about forecasts that has really spooked investors. They are down over 20%, and it's not like this is a small company. Like Salesforce is not a they're not a small company. Um, so you got this huge island reversal, right? All this 2 quarters ago, they had this huge gap up here, and then we kind of just traded up above it, and then now we just had this huge gap down. Obviously, we're gapping way below that 200 daily EMA, and then what about the weekly? Well, the weekly's coming right down into that 200, 100 on a weekly kind of time frame. So, this is not exactly a company I would be willing to be bearish on, but yeah, Salesforce, woof, getting smacked today. So if we got time, we'll take a look and see what we can find out. But that'd be one that I'd be paying attention to. Is just what they say, if it was company specific or economic specific kind of situations. VIX, after several days of kind of rising here, a little bit of a cool off day today. Nice little gap up, but it's definitely come back down. Be curious to see what happens here if it kind of just hangs out, chops sideways, and pops later, or if we just kind of had a little pop moment here for the past week and we kind of come back down. So, yeah, that'd be another reason why I'd be a little bit more willing to lean bullish on the market. 'Cause we did see the VIX kind of pop pretty good over the past several trading sessions. Dollar dropping off today. Let's quickly go over some economic data actually as we get into talking about that. So we got jobless claims data, and we got initial jobless claims came in at 219. The forecast is calling for 218. Prior was 216, so a little bit higher than what they were expecting, what they forecasted. Not a big deal. GDP growth rate basically came in line. Not a big deal there. Core PCE came in at 3.6%. Forecast is calling for 3.7. Prior was 2%. It's not a big deal. Obviously, kind of coming in a little bit lower than forecast, but the problem is well, you're ticking higher. So that's kind of the problem there on inflation news. But other than that, not really too much other than that kind of stuff kind of going on today. So, yeah, just some updates there on some economic data. But yeah, you can see the dollar kind of dropping off today. Be curious to see if we do engulf here on the dollar day over day between yesterday. Looks like we'll maybe start to see it bounce here. So we'll see what happens. Obviously, we did have a pretty strong moves there on the dollar and yields over the past couple days. So we'll take a look at yields here in a sec. Gold looks like it's setting up for a nice little breakdown with that little upper wick today. What do the futures look like? That might give us a little bit better. I don't know. That actually looks kind of bullish. So, yeah, that looks bullish. The GLD doesn't look bullish, but that's just GLD just doesn't trade the whole day. So yields. Okay, so yields. 10-year yield. This looks like one black crow type setup. The thing I'll say here on yields is this is not totally like gonna drop off here. We've risen here for about 2 weeks. We broke this high from May 14th, which is rather important. And the other thing I would say is we should actually come back and retest into these highs above 4.5%, like right here in these ties area. So we might do that here over the next day, maybe early parts of next week, and it might be when the moving averages also help support maybe another bullish trend on yields. We'll have to wait and see on that. But yields have moved pretty strong over the past, especially the 2 previous days, and that wasn't really based on economic data. That was just investors moving the market around. So apparently the market's perceiving inflation data coming down than expected. And it was. We saw that it was like 3.7 was the forecast, and 3.6 is the data point. And it's like, yeah, but prior month was 2%. So it's not like it's dropping. It's not like it's dropping. So I mean, just because it's coming down a little bit less than what the forecast was doesn't mean that the trend's not higher. So, anyways, yeah, we're going to have to really see here the next couple days on yields. If they just retest into these highs and moving averages and we continue higher, that would be a situation. 30-year also not really doing anything bearish engulfing or one black crow, anything like that. So not yet. Just kind of a pullback day. What about the shorter term? What about the 2-year? 2-year looks like it. I mean, yeah, it kind of looks like a possible evening star reversal type pattern here. Possibly pulling into the moving averages on the daily. So yeah, it's shorter term definitely cooling off a little bit. But the shorter term, the 2-year, it was pretty strong there since mid-May. It was pretty strong up until the past couple of days. Longer terms kind of played a little bit more catch up. So we'll see. We'll have to just see how that plays out over the next couple of days. 10-2 inversion. Yeah, not too much going on there. 2 previous days, pretty strong move. Today, just kind of hanging out. HYG, of course, all the yields are dropping. So yeah, we should see bonds up pretty good today. The interesting thing here on the HYG is, are we retesting into these lows right here? And this is probably the best spot to go bearish on the HYG. Very strong case could be made of that. Very strong. So I think if you're doing that, your stop loss is definitely like up here, like above these two wicks, on May 23rd, May 28th, like right up there. If you want a little bit looser one, obviously you can put one up here. And if you're saying to yourself, okay, I'm gonna put it up above our recent highs back from mid-May, and then if we get the breakdown, then I'll move it to like here, and then it'll drop it a little bit more later on, that kind of stuff. Yeah, I mean, that's very logical. So yeah, there you go. All right, the LQD, nice bounce here as well. Same kind of deal. Could be kind of just retesting right into these lows. Also where the moving averages are. Next couple days are going to be really important there for the LQD as well. TLT not bouncing as much, but definitely is getting into this kind of low area right here from kind of early mid-May, and then also early mid-April, kind of that same spot right there. So yeah, next couple days is going to be rather important for yields and bonds. Yields and bonds and knees and toes. All right, taking a look here at sector rotation for the day. Wow. Okay, so most of this week, most of the last week, I mean, tech was doing really good. But you see tech, man, just getting liquidated today, down 1.83%. Wow. Okay, everything else is positive, or at least outperforming the SP 500. Communications, energies, healthcare, staples, industrials, financials, discretionaries, materials, utilities, and real estate up at the higher end of the day. If we take out the gap and see what else is kind of going on, tech's still getting hit throughout the day. And then energies is kind of in line with the market there. Staples, communications, discretionaries, industrials, healthcare, real estate, financials, utilities, all kind of lumped in there. And then materials actually seeing some pretty good buying action throughout the day. Salesforce plunges by most since 2008 after weak outlook. That's not good. But we want to know, is it company-specific outlook or is it economic outlook? Shares slide by the most in almost 2 decades after projecting the slowest quarterly sales growth in its history, renewing concerns that the company would be left behind in the artificial intelligence boom. There you go. It sounds like it's more company-specific. Revenues will rise as much as 8% to $9.25 billion in the period ending in July. San Francisco-based company said Wednesday in a statement. So there's still revenues are still increasing up to like 8%. It's like that's why it's very difficult to say, hey, I want to go be bearish on this company. It's like they're still making a lot of money. They're still growing in high single digits. It's pretty good. That would be the first quarter. That would be the first quarter of single-digit sales growth for Salesforce in almost 2 decades as a publicly traded company. Stock sank by as much as 21% to 215.40. Yep, don't care about that. Analysts had, on average, estimated $9.35 billion in revenue, according to data compiled for Salesforce by Bloomberg. Salesforce said profit, excluding some items, will be about 2.35 a share, also falling below expectations. So they even lowered earnings outlook as well. The outlook is heightening. The outlook is heightening investors' fear over Salesforce sliding sales growth in the past year as the company has turned its attention to bolstering profit. Management has touted the potential for artificial intelligence-oriented software and features to robust revenue. The company has also increased buybacks and initiated a dividend in an attempt to keep Wall Street happy. Okay. So this, and especially this part right here, using artificial intelligence oriented software and features to boost revenue. So this is the whole part that we've kind of talked about here about the other big tech guys, Microsoft, right? The ones that are down, but they're mostly down because of probably Salesforce more than anything else. Alphabet, Microsoft, Meta, those guys are spending so much. They're spending a lot more money over the past year in cash and investing activities. And that's the big reason why. They need to continue to do that to keep revenues growing. The problem is the spend rate, the investing is higher than the growth of revenue. Eventually that does catch up if you don't wind up getting economic like margin expansion again, and especially like revenue isn't able to grow fast enough, you're gonna have that margin contraction, and that is what they have to do it. They have to continue to spend that much in AI, and that's why they are doing it. Is because this is a much worse situation that Salesforce basically said they're in.